Sri, do you feel that you got it wrong, that we have Make America Great Again goals?
I don't think I got it wrong, Tom, in the sense of the second quarter being very strong was anticipated because that was the impact of the peak effect of the tax cut. And then you see the third quarter slowing and the fourth quarter expectations are slower. So I think what you had was a bump, an increase in the growth rate, but the long-term trajectory of a slowdown is still very much present, Tom.
Sri, we just had Taylor Riggs talking about Mr. Buffett and the idea of share buybacks, and we really haven't seen that much CapEx. Do you assume with your more tepid glide path that the CapEx doesn't materialize to any great extent?
The CapEx, I don't think, will materialize. I would agree with you, and particularly because of the fact that the tax cuts have gone more into share buybacks, increasing dividends rather than increasing capital spending. The other part is that you're having increased interest rates, and if the wage growth number for Friday is going to make the Fed all the more inclined to increase rates on December 19th and to suggest another 3 increases in 2019, that will be a negative for capital spending as well, Tom. So I think we are seeing a continuation of the impact, which is why I feel much better about my peak growth situation and thinking that the increase in growth rate we have had is temporary and unlikely to continue over the longer term. 2 more points. You have the situation with the trade war accelerating. Many of the trade tariffs are going to become effective in the new year rather than in the old year. So that, again, is going to be a major influence in terms of where it is taking place. The second point is that emerging markets now account for about 60% of the global GDP, and they, in turn, are going to put in a negative impact on global growth in general and U.S. in particular.
Sri, what's your take on Southeast Asia? So a lot of these economies, of course, have high stakes because of the trade tensions between the U.S. and China. Then there's the global monetary policy tightening, a strengthening dollar, and the risk of capital outflows. Do you worry about the state of these economies?
I worry about the growth rate of the Southeast Asian economies, Francine, very much, for at least a couple of reasons coming from the region itself. Even though Mr. Kuroda at the Bank of Japan talked about normalizing rates in his country, and if he ever proceeds with it and Bank of Japan, in fact, tightens, that is going to be a negative for Japan and the rest of the region. And the big influence for Southeast Asia is going to be China. There again, you see the impact of the slowdown in economic growth and the trade tensions. I was also in India recently looking at it, and this is the country which, according to the Bloomberg charts, provides the second most influence on global growth. And even though the growth has kept up so far, higher oil prices are taking a toll, and that's also going to be negative. So all of those are, I think, emerging from Southeast Asia, and you're not having too much good news there, Francine.